Hello, welcome back to the channel. So as I promised, today we will cover the second strategy that is relying on divergences. This one will be, as you probably recall me saying in the previous video, a bit more slow in terms of entries. I did the backtesting of month of February on US dollar Canadian dollar and US dollar Japanese yen, and during the whole month I only had 8 entries, but still the strategy provided a solid gain on account, so it's definitely a strategy to keep in mind and to consider it if you want it to be backtested this weekend. So without further ado, let's go and talk about the strategy. Okay, so regarding the strategy itself, bear in mind we have numerous conditions compared to the previous strategy, and as you can see, the trades have bigger stop losses and a 2-to-1 reward to risk ratio. So the trades will take a bit longer than the previous one. That's the first thing that I want you to be aware of. In terms of indicators, we will be using the 600 EMA on the 5-minute time frame, which is the equivalent of the 50 EMA on the 1-hour time frame. If you want that, you can use the multiple time frame indicator, but I just like my EMAs to look smoother, so the value is the same. That's your pick. We will be also using the 150 EMA, which stands for the 50 EMA on the 15 minutes time frame, and the default MACD indicator from the TradingView app. Okay, so now regarding the conditions, we will first look at the two EMAs. So if the smaller EMA, the one on 15 minutes, is above the one on the 1-hour time frame, you will only be looking for buys, and vice versa. If the smaller EMA is below, you will be looking for sells, of course. Now, the MACD has to be under the 0 level for a buy and above the 0 level for a sell, so these conditions have to be met simultaneously. And of course, the core of the strategy is divergence. This time it's regular divergence, no more hidden ones like in the previous strategy. So for long entries, we will be looking for lower lows on price and higher lows on the MACD, as you can see on this trade that I displayed here. This is a long entry. And for shorts, of course, you will have to look for higher highs on price and for lower highs on the MACD indicator. Another important aspect here is that the MACD doesn't have to touch the 0 line of the MACD while the divergence is formed. So as you can see here, if it were for the blue line to go above the 0 line, this signal would have been disregarded and we would have to look for another one. Okay, now regarding the trade management, we will enter the trade on the cross of the MACD, so in our direction. So in case you're looking for buys, you're looking for a cross up on the MACD, and in case you're looking for shorts, of course, you're looking for a cross down on the MACD. The stop loss will be placed 2 pips or 20 points below the local low in this case, or the high if you're looking for a short, and you will be targeting 2-to-1 for your profit. Okay, this is long example that I have for you here. So as you can see, the orange EMA, which is the 50 EMA on the 15-minute time frame, is above the 1-hour 50 EMA. So in this case, we are looking for buys, so that condition is met. Now we will have to look if the MACD is under the 0 line, which is. Now we will have to look for the divergence, and as you can see, from this low to this low, we have a lower low on the price, but a higher low on the indicator. So this is a valid bullish divergence. And the final thing we have to check is if the MACD crossed or not the 0 line during this divergence was formed. So we check that box as well, so we can enter a trade on this candle. So stop loss, as you can see, was barely hit, so stop loss will be 20 points below this low right here, and the take profit will be set at 2-to-1. And as you can see, this trade was a winner. Again, I saw this strategy on another channel, and I saw that you have to monitor numerous pairs for you to have a a large enough sample size, I will backtest it on two pairs, US CAD and US dollar Japanese yen, for the month of February, and I will return to the results with the results, sorry, but before that, let me show you a short example as well. So regarding the shorts, let me first show you an invalid entry. So as you can see in this instance, we have the conditions met, so we are in a sell market right here, sorry about that pause. So we can see that these two highs, so the price is making higher highs, but on the indicator it's making lower highs, which qualifies as a bearish divergence. So if it were to enter, you were to enter on this candle right here, sorry, on this candle right here, which is the cross down, but as you can see, this position would have been invalidated anyhow because the MACD crossed the zero line in between, forming this gap in the histogram. So this is an example of a trade that you should disregard, and I will come back with a short example right now. So this is a valid sell example. So as you can see, we have all the conditions met. We are in the main sell condition, which is given by the EMAs. We have a divergence on the MACD and the price, and we also have a cross down, but unfortunately this sell wouldn't have worked out, so this is a loss. But again, I had to dig deep for this sell because I simply couldn't find a sell instance for this strategy, because during our backtesting with using two pairs on the month of February, we only had 8 trades, but still the results were good. So from the 8, 5 trades were winners and 3 trades were losses. Again, risking 1% per trade, the gain on account would have been around 7%. So still not bad. But again, what I don't like about this strategy is the fact that the entries are so rare that you end up sometimes waiting a few days for a losing trade. But again, this is a strategy that we propose to you, so compare it to the one that we presented yesterday. And please let us know in the comments and in the poll that we will be creating on the community page, so check that as well, which strategy you want to be backtested this Saturday. Until then, trade safe, trust the process, and see you on our next videos. Bye bye.